Okay, so I want to go over something really quick, just a short video on what just happened. And yeah, so let's dive into it. Let's go to the book map and let's pay attention to the heat map here, right? So, how did all of this get through all of this red hot liquidity, right? So, wasn't all of this supposed to act as resistance? How did it break through so quickly and so easily? So, hopefully, y'all have reviewed Module 1 enough to understand this, but I do want to make sure something is understood visually. Okay. So, even though you can spread the time axis out, and right here, this is 1 minute splices. So, this is really zoomed in, right? Yes and no, because this still all looks like a big blob. It's all smoothed over. There's no really granularity to your price axis, right? So this is $100 tick size or $100 increments. So what you need to do is go to about like $20, even like $10. Now at that point, you can see again, 60, 80, 100, 20, 40. So that's every $20. Now we can see these resistance or liquidity lines as single price lines. And that's what you want to do. You want to be able to see that, or else it's going to be all smoothed over and it's going to just look like a big blob of orangey red color, right? But that's always the case if you zoom out and you see everything around price. It always looks like that. A lot of that's algorithms and bots that do that. So, what's important to note here is how did price get through this area so easily with not a lot of volume? And this is something I say over and over and over again. Big volume means nothing. Now, big volume that is unopposed is everything. So let's dig in here. So you see this red line here. You see this red line here. You see this red line here. Now, this one was a bigger bubble, so that one makes sense. But what about these? Because you have 200 contracts right here. This was only 179. You have 195, 180, 222 contracts right here, but this was 114. And you can hover over it and see exactly what your bid and ask was at the level. So let's dig into this a little bit more. Now, if you start to zoom in, you can see that all that liquidity was pulling, added and pulled again, added here, pulled again. But when price got to that liquidity level is the most important part. And what did it do right before price got to it? It pulled. So now you see the ask right here in this zone was 110, meaning that this wall was only 110 Bitcoin, where this bubble was 143. So it ate through it and consumed what was left after they pulled from 200 something back here to 110 right here. So that matters. You can zoom in even more, and now you see where price actually hit the level. It was very small liquidity. First price hit here, right? Bounced off because this little nugget's not going to do anything to this wall. That's very, very small, right? So it needed something more to start to break through this wall. And then you had multiple attempts to break it down completely. So going to these next walls. Again, if you're zoomed out, you think this whole thing might be red. If you're looking at the chart like this, right? So you have to zoom in when price gets to this level. And again, we're not going to take every single heat band as a potential trade. No, you need to have other things um, outside of order flow, other key levels, your environment, the context, the location, all of that goes into this to take much, much better trades. And look at this level. What happened to this level when price got here? they pulled. So price is now unopposed. So this small volume, hell yes, it can get through there, right? So that's just the point I want to make about liquidity bands. You have to pay attention. You have to zoom in. And of course, you can go over to Market Monkey and use that, and it's the same thing. Um, Now, if you come over here to Market Monkey, you can look at the heat map in the same way, but sometimes people like Market Monkey heat map better because it doesn't do the same thing. It keeps its structure in these really clear lines like this, right? So let's go to that same scenario here. And let's take it down to the 5 minute actually. So you see all that same liquidity, but you're really seeing it as lines, like when you're zoomed in a Bookmap, right? And this is the HD. Now, if you turn it, if it's on SD, our standard definition, it's going to look like the blob, just a blob of color, right? Now you can see the numbers if you zoom in, so you have that working for you. But I prefer, especially for scalping or lower time frames, um, to be on HD. So if we are on SD, it helps to see these outer areas when you're zoomed out, right? But once you turn HD back on, it takes that tick level and reduces that tick level so you can get a little bit finer increments. And you can see that liquidity very, very clearly here.